I welcome everyone to this week's edition of our bi-weekly update, where we give you a chance to say what's hot and what's going on in the markets and also with Gentian. So today, I'd like to begin, of course, by going big, and it's in the throes of summer. So we're super excited about that. I'd say my gratitude for myself today is my mom being up here in Wisconsin from Iowa. She came yesterday. I had a wonderful night last night. She'll be here for a few days today. She will also be here at the Shred event, which will be quite fun as well. It was wonderful seeing everybody last weekend, or the weekend before, if you will, at Gathering on the Green, which still kind of all melds into one. It was about 4 days of seeing lots of you who came, which was fantastic as well. So I'm grateful to see, and really the relationships that we have are all precious. We enjoy every single one in its own unique way. So I'm very grateful for that as well. My daughters, my wife as well, who put up with all the craziness sometimes during the summer, which is fantastic, as summer is in full swing. So with that, how about yourself, Ken?
Yeah, good morning, everybody. Great to be here with you all. Thank you, Chris. Yeah, my gratitude goes out to those small connections that we get to have with each and every one of you. You know, yesterday I was up in Appleton meeting with some wonderful clients like all of you guys, and found out that someone was born in Sheboygan just like I was. So we had that connection. So, you know, then we all wised up and moved away, but of course, but just joking. But you know, it's fun when we get to those levels of conversation, that friendship level starts to happen. And, you know, again, we're here to be your advisor, but it's much more than that. It's fun to see those connections.
Awesome. Thank you, Ken. How about yourself, Zach?
Yeah, thank you, Chris. And I'll echo yours, actually, just in the sense of just extremely grateful for all of the events we've had recently with Gathering on the Green, the Shred event today, National Eat Outside Day. Our team has put in a ton of work. It's been really fun to operate with them, but also to see the attendance, and also just to spend time with all of you and our Gentian family. It's just been extremely humbling and been a ton of fun the last few weeks.
Awesome. Thank you very much. How about Mike?
Thanks, Chris. Yeah, I mean, I'm going to echo what everybody else said. It's just been a really fun couple of weeks, and you know, we're really looking forward to being able to see some clients and hang out today, and just enjoy being outside. It's going to be a beautiful day in Wisconsin, so looking forward to that.
Absolutely. Every day is a beautiful day in Wisconsin. We totally appreciate that. How about Kristen? How about yourself?
I'm thankful for the beautiful weather and for being in the office today. I'm looking forward to meeting all the clients that come to our Shred event today.
Awesome. Awesome. Thank you very much. So I usually like to start the day with something funny, and I was actually going to tell you guys a joke about time travel, but you didn't like it. So at any rate, what I want to do as we go forward here, that's a great dad joke for you kids and grandparents as well. There's a lot going on. Obviously, still things are happening in Ukraine. Things are happening all around the world. We're seeing some of the biggest news in the world is obviously the Live Tour and the PGA. Oh wait, that's just what everybody in golf is talking about. Really not important to the world, but it's kind of one of those crying from the front of the yacht. Also in this, some of the headlines have been the super wealthy are clamoring. There's a massive run on super yachts. So for any of you who are looking to buy super yachts at a reasonable price, I'm sorry. So I would not be looking at a super yacht or driving it, but I think somebody asked one time if we'd be having a Gentian super yacht, facility at some point in time. The answer is definitely no, not a chance. At any rate, that was going on. You know, a lot of things been going on too with housing. We've seen mortgage rates go up pretty significantly. We actually saw the mortgage demand drop, I think, to a 22-year low as rates are higher. So we're seeing some interesting now with that, though, despite that, prices of homes have gone up. There's tons of statistics we look at. I'll give you a few other quotes as we go a little further on. But there's some incredible data too around some of the valuations of companies presently as well, and some of the fear that's really happened in the market, which is pretty nuts and crazy too. You know, we've also, I think the inflation, the biggest portion I've seen about inflation, the best news potentially is that we might see this whisper of a 10% increase in Social Security year over year. The biggest I'd ever seen was 5.4 or 5.9, which was last year, I should say. So very interesting to see what's going on there too. A lot of these things affect you, but I do know in the summer, a lot of what happens in the summer is really more about, you know, family, travel, getting together. It's a wonderful time in Wisconsin. We got 12 weeks of it, so we take advantage of that as well. In the South, I know you guys hide from it. There's been record heat waves. If you look at Europe, Europe is beginning to experience some of the fires we experienced last year, which is even more interesting as well. You're seeing, I think the highest temperature in Great Britain was 104 degrees recorded yesterday. It kind of seems odd, but they really have not experienced temperatures such as that as well. I think there was record temperatures in Spain of 117, 118, and there's a lot of Portugal that's on fire. So with that, we throw a lot of prayers out to everyone who's really suffering from heat and worldwide climate change. So I think one of the things really focusing on is how can we help, can humans do anything to help reverse that? That's a question that's being debated hotly as well. So not only is it just our environment, is it the market as well? You've seen the market in correction that's pretty significant. You think June home sales fell 5.4% in May for the first time in quite a while, but also then sending another record price. So watching all this in the swirl of economics is quite interesting. So we study economic history pretty heavily. I won't go into much more of that right now, but I wanted to just start off with some of the things that we've seen. A lot of trends that are going on, a lot of questions you guys have about retirement. We'll answer some of those as well as we go forward. But I'd really say today's inspiration for myself is, this has been a big statement, and I've had a few questions around this lately, but I'm retired, Chris. What is my purpose now? You've heard it from me before, but I think people have said this too. I'm busy, but I feel like I'm treading water. I don't really feel like I'm accomplishing anything. I don't really feel like I have an end goal or a horizon to chase as well. So something we'll look at for that is a few different ideas and exercises on purpose we might look at. I understand that we're here for investments and retirement planning, most importantly. But as we look at this, planning a life is also equally important, spiritual, financial, as well as spiritual and financial are super important, but also personal planning. And I think these are things that are missed oftentimes. So as we look forward, we want to make sure that we're at least touching base on 2 or 3 of those, the things we can help, feeding you with some of the ideas that might help you discover those. Because here's one thing we found: we will not discover them. You will, maybe through somebody else's prodding and guidance. So with that, what I'd like to do is maybe bring it over to Zach. Zach, what are the facts? Zach's facts is one of my favorite sections, just like Mike's Minute and Ken's Corner. So those are my 3 favorite segments of the show, except for today we have happenings as well. So maybe that's my favorite too. But at any rate, what I want to bring it over to is Zach's facts. What kind of facts do we need to know today, Zach?
Thanks, Chris. A lot of favorites. I love it. But we'll go through the year-to-date returns like we normally do. A trend that we've seen across the board is that we're about 2% better from the last 2 weeks across all categories. And really over the last month, some significant gains of certain asset classes and kind of the impact of rebalancing. We'll go through just a very quick chart that we have called the cost of missing the best days. Just as a reminder from a day like yesterday where the market goes up significantly in a short amount of time. Just touch briefly on fixed income. Mike will go into more detail on that. And then just a real quick interesting fact if we have time as well. But going through the year-to-date returns of the different indexes, the S&P 500 temporarily down 17%, but over the last month up 4.5%. Dow Jones 12%. I'm rounding to the nearest whole number as well. Last month about a little over 4% increase. The Nasdaq 25% temporary correction there on the year. And last month 5.82%, almost 6% positive in the last month. And here's where we've seen the biggest difference and the biggest jump over the last month is the small caps. The Russell 2000 temporarily down around 20 still, but in the last month over 6.22%. And the growth side almost 9% positive in the last month, still about 25% off of where it was to start the year. But the really beautiful thing about that is if we did any rebalance in the last 6 months, would have been buying large cap growth for the most part, and also small cap growth where we've seen the biggest gains over the short term. Also any potential Roth conversions potentially would have came there too if it made sense. So those are nice to see in the short term. On the international side of things, temporarily correction around 19%, and the emerging markets temporarily around 20 still as well, but 2% better in the last 2 weeks to about a month. Just real quickly, I'm going to jump into this chart real quick. Chris, can you see this?
Yep, we can.
Perfect. So this is one of our favorite charts to go through, and yesterday was a tremendous reminder of it, just in the sense of how quickly things can change and how important it is to stay invested. If we were to invest $1,000 in 1970, roughly 50 years ago, that $1,000 would now be $121,000. If we missed the best day of trading in 50 years, it would go from 121 or to 108, which is roughly about 10% difference. If we missed 5 days or roughly 1 week of the best days of trading over that time, go from 121 to 77 or a 36% difference. If we missed 15 we go from 121 to 43, or a 64% difference. And again, over the last 50 years, if we miss the 25 best days out of roughly 4,500, maybe even over 5,000 trading days during that time, we go from $121,000 to $26,000. Just an absolutely amazing difference in the importance of staying invested during this time. So just things can change very quickly both ways, especially in the short term. But yesterday's a great reminder that we can have some very large days in a very short amount of time. Just real quickly, Mike will go into more detail, like I mentioned, on the fixed income. We're right around 3% yield from 6 month through the 10-year. So it's extremely important for those questions that we get often of just what to do with outside cash to get a little bit higher rate of return. Just be careful extending that time out too far with CDs. Keep them short for right now, especially as interest rates are rising. And then just a real quick interesting fact, Chris always touches on technology and the amazing things coming in healthcare and everything else. And Northwestern University research team just developed a miniature implantable cooling device aimed at relieving nerve pain without any drugs. So it's a piece of tape, wraps around the nerves, and it dissolves inside of your body within a few months. So just really amazing, all the things that are happening on the biotechnology side and just in technology in general. I'll pass it back to you, Chris.
Absolutely, Zach. That reminds me of a couple of things. You queued up a couple of ideas. One was advanced neuromodulation sciences. That was back when I first became an advisor in 1995. I thought it was the most brilliant idea in the world because it sent reverse signals down your spinal cord to reduce and eliminate pain. And then it was bought by somebody and absorbed, and I've never really seen it since. But it's wonderful to see some of those things coming up as well. One of the other things echoing your statements today is small cap and some of the valuations of small cap. According to JP Morgan, one of the sources that we watch often, you'll see that small caps are actually at about 12.5 forward price to earnings ratio, which is about as low as they hit in the trough of 2009 at about the worst. So people are looking at this in perspective. I want to give you an idea of how bad the pain is in growth. I'll give you a few other statistics as well. I've got like 75 charts, so I'm only going to talk about them. I won't bring them up like the other guys because those are great. But also, this is a pretty interesting one too. If you looked at, I think I told you last time that this is one of the worst. I think it's the fourth worst start since I think only the worst starts of markets in years were the Great Depression, World War II, and Vietnam, and a tightening session in 1970. So you look at that, you look at what's happening, and it's very interesting to see. But also for individual stocks, the correction's been worse. I think the interesting part of this is that the broad market averages show their drop of around 20%, which is bear market. But it showed that 81% of stocks in the NASDAQ were actually in a bear market. So it's 81% were down 20% or more. But actually NASDAQ stocks, I think if you looked at 81%, of them were down 56%. Of S&P stocks were down 20%. And if the NASDAQ, the average NASDAQ stock has fallen 51%. So let me try to start that again. The average NASDAQ stock has fallen 51%. This is according again to JP Morgan. The Russell 2000, that's small cap, as Zach was talking about, the average has fallen 47%. These are massive bear markets and asset classes. But as Zach had said, one of the reasons that we asset allocate is so you've got categories that are up that we can rebalance. This is the buy low, sell high, and a forced discipline to do so when we're balanced. So thanks, Zach. You remind me of a few. There's a whole bunch more charts I won't go through, but it's just showing that some of these massive off valuations, especially in emerging markets, small cap, and most importantly, the fastest growing stocks in the world, the 75, are actually at pre-1970 troughs as far as valuation. Somebody actually said that they called them a depression in those fast growing stocks. They're lower than they were in 2019, despite 3 years of growth. So that's the fear that's out there. That's the fear that's caused everything to drop dramatically. And that's the fear I think people are feeling today. I just want to make sure you understand the magnitude of that. So thanks, Zach, for that information running through. Why don't I run over to Mike's minute? Mike, what are some of our asset managers telling us that we should know?
Yeah, no, absolutely. Thanks, Chris. And
Mike, before you go, can I stop you for 1 minute? Would you be willing to tell us what you did 2 days ago that we all should know? I wanted you to announce it rather than me, because it's a pretty big accomplishment.
Ted, I really appreciate that. Yeah, so on Monday, I passed my CFP exam, which was a goal of mine for a long time. I've been in the business now for, 8 years, 7 years or something like that. And ever since I realized that this designation existed back when I got fully licensed in, 2017, I it's been a goal, and I worked pretty hard the last couple of years towards it. So it feels really good to be able to move on from that. And now I got to figure out what I'm going to do with all my free time.
I gotta tell you, pretty much, if you ever wanted in the last year or two to say, where's Mike? Oh, he's studying. I mean, literally almost any time. Hey, we're gonna go do this. Yeah, I gotta study. I'm gonna study. So he studied well. He probably passed the CFB by about 20% too much. That means that you scored really well. But that's the way that it works. So congratulations, Mike. That's a huge accomplishment. I can remember, I can barely spell CFP anymore. I don't even know what it means. But I've had it for many years, but I know that this test is one of the kind of gold standards, if you will, of planning. So I really appreciate that and your hard work in that as well. So congratulations to you. I'll give you a round of applause.
Thank you. No, I seriously appreciate that. It's a great feeling, but yeah, it's actually funny. So the neighbor here, we're pretty good friends with him, friends of the firm, and he made a comment about whose car is there till 9 o'clock every single night. And I was just like, well, you're going to know if I passed or failed by whether or not after July 18th, that car is still sitting in that parking lot. So just,
that's
just
awesome.
a funny little thing there. But yeah, so jumping back into the topic of kind of, Chris brought up some of those growth valuations, and within the Russell, where we say that, however much of that index, individual stocks have really, really felt it. And so that's the beauty of diversification. That's why we have a small portion of our portfolio allocated to these things, so we can capture the upside in the moments that we rebalance and it goes up 6% in the last month, and also be able to diversify away that pain for one of those indexes to be down so much. So it just comes from owning different asset classes that are doing different things. And one of those asset classes that a lot of our clients own when it's appropriate are bonds. And the idea that this year that bonds are down with the S&P 500, not quite as much, but down in general, it's very rare that both the S&P 500 and bonds are down to start the year at the same time. And essentially it's because of rising rates. When rates go up, the bonds that pre-exist are not worth as much because they don't pay interest at the amount that a new issue bond could. So that pushes the price down, and folks need to buy them at a discount, or sell them at a discount rather, because otherwise you're never going to be able to get rid of them or move on to something different. So that's why bond valuations are down. But what we're seeing now is with those new issue bonds, yes, mortgage interests are up, but the idea that money isn't free anymore is something for everybody. So corporations can't give away bonds to get funding for themselves any longer at a 2-3% rate. We're seeing corporates getting back up to 5%. And so there's opportunity there for, a shift in kind of how things are looked upon. And we're going to continue to have those discussions and figure out when it's time to add some duration back to the strategy when it's appropriate for each individual investor. So things that we're looking at, things that we're talking about, things to be excited about. So back to you, Chris.
Awesome. Thank you very much, Mike. I appreciate that. Now, it's also summer around here as well. And summer for Iowa and this time of year is typically sweet corn time, right? So sweet corn comes out. It's so awesome. You maybe start to have it at fairs. So actually in that realm, I want to tell you a corny joke. What did the baby corn say to the mama corn? Where's popcorn? Anyway, that's a good one. I'll leave that with my dad jokes for you today. I thought that was a pretty good. That comes directly from Zach and his parents' book of dad jokes that they gave me. But I'd like to say it's my own, but it's not. At any rate, you've got to be very, very quiet when you're in Iowa. You know why? Because the corn has ears. Anyway, I did lie. I said I'd only tell you one more, and that was just one more. Anyway, Ken, how about what do we need to know in planning today? What's important for us for actions, activities, or what are you hearing in that category?
Yeah, thank you, Chris. Appreciate it very much. And congratulations, Mike, again. Great to see your dedication to the team. Great to see your dedication to the clients ultimately as well. And that's fun to see that. I remember those days. So congratulations. Job well done. And so, yeah, when we think about planning, some of the things that we're hearing in meetings right now is still bridge financing. It's the idea of financing things short term. It comes up in quite a few meetings. How do we purchase something? How do we do that? There's 4 or 5 different unique ways to do it, and each one has its own way of doing it, whether it's home equity lines of credit, whether it's securities-based lending. It's all in your scenario, but it's a lot of great ways to finance because we had a wonderful client. A lot of you guys like the idea of RVing right now, and so again, we were going to take money out, pay a lot in taxes, right, to get the money out, versus just financing that for 3 or 4 years and saving ourselves $30,000, $40,000, $50,000 over that just in taxes alone. So talk to us if you're thinking about buying something or purchasing something and how best to go about it. Because I think we have some pretty good ideas to share with you that ultimately will put more money in your pocket at the end of it all. So that's coming up. Perspective. You know, it's really fun being in meetings with all of you. We get to offer each other perspective. Sometimes we offer perspective on the markets. Sometimes you offer perspective on the 60s, 70s, and 80s, living through those time frames. And I was talking to a wonderful client yesterday, and we were talking about inflation, and we were talking about that whole idea. And that back in the late 70s and 80s, wage inflation was also going up at like 10%. And so, you know, every year when you came due for a review, you know, oh, I'm getting a 10% increase. But all of a sudden that 1 year came where it's like, I'm only getting a 2 or 3% increase. We get so conditioned to what's happening that sometimes we lose perspective of the overall. You know, that's happening with mortgages right now. We've been pretty conditioned to have a 30-year mortgage at 3%. And all of a sudden now they're at 5 and 6, and we think that that's astronomically high. But if you ask someone back who had a mortgage back in the 80s, this is astronomically still low in their perspective, right? So same things happens with the markets. If you've been through a market correction before, you know kind of the gist of what's happening right now, and you know what to do not to make those fatal errors. If you've never been through a correction before, you don't have that perspective yet. And so again, we're here to help you with that. We're here to help you get through these times that aren't fun. But again, these are necessary times to go to a better place at some point in time in the future. Qualified charitable distributions still come up in meetings. We love it. It's really giving money to organizations you feel strongly about from your IRA. Talk to us about that. Don't stop contributing. You know, I know a lot of the participants on the webinar right now are past this stage, but you have kids and grandkids that are still in this phase, and we hear time and time again, hey, we're just going to wait till it gets better and then we'll start contributing again. Be the hero, please. I've mentioned this before, but don't let them stop contributing. This is the time to go buy things that are on sale 20, 30, even sometimes 40% off right now. So that's a wonderful thing. So if you're thinking about an unplanned distribution, we're ready for that, of course. You know, that's by design of the portfolio. But if we can wait, you know, to buy some time through all this and any unplanned distributions, you know, we all want things today. But if we can have a little bit of patience and buy ourselves some time through all this, that's only going to benefit you and your long-term and your family and your wealth going forward. So again, we're ready for it. But if we could hold off and just be patient, that would be very, very ideal in this scenario that we're in right now with the markets. Back to you, Chris.
Thank you, Ken. I appreciate that as well. I got a question for you, Ken. Where do math teachers go on vacation?
I don't know. Good question.
Times Square.
Oh,
Anyway, that's a good one for the math. All
Good
this,
one.
it's kind of a smarter joke out there. It may take a little bit more to get with Ken, and I figure I'd throw another dad joke in. I think it's always kind of funny as we do. No, I appreciate that, Ken. Thank you very much. You know, before I get into the things happening at Genting, you pay attention to with Kristen, you know, I guess my goal here is to kind of close. A lot of people are, again, there's so many statistics. I got to be careful to throw too many out here. But looking at, and this is what people have often looked at, according to Credit Suisse, and this is a March 2022 graph, but typically people think this Fed tapering is always bad for the markets. And actually, it's not necessarily bad for stocks. In the past 4 periods of rate increases, the S&P went up 11% prior to the first rate hike and another 23% over the next 3 years. That's an interesting statistic when you look at what's going on or what may go on. And again, remember, markets don't follow exactly what has happened, but a lot of times they rhyme. So we look at trends and perspective you might see. You might start to hear things like, oh my gosh, stick with it, do this. All the things you know we hear fundamentally on a consistent basis. You hear, we try to teach, we try to offer perspective, you probably know. But what's interesting about there is the world still fires back all these. If we look at the headlines, you know, this is that, and people, I just had a gentleman who's been in the business for a long time, handles some big accounts, say, oh my gosh, here's one of these funds and it hasn't been performing well. It's a 3 out of 10 over the last 2 quarters. What should I do? And I kind of looked puzzled, and I'm like, you should be patient with it and invest more money in it. And he looked at me completely, well, why? I got to get rid of it. No, that's the worst thing you could do, is get rid of a fund that has great high quality names. By the way, the names in that portfolio I was talking about were the high growth stocks that are in a massive historic correction. So wouldn't you want to add more to those? Well, yeah, but It's just interesting to look at. So you think that people in our business know what's going on? Oftentimes they don't. I'm not even saying we, obviously nobody knows what's going to happen on a go-forward basis. We study extremely intelligent people. I'm sure way more intelligent than us, but we look for the wisdom with them. We try to offer that to you just to give you perspective on how things occur. And most importantly, how to deal with the ambiguity and to have the ability to adjust during market corrections. You guys have all done a fantastic job with that. I know a lot of people have had a much more difficult time, but our goal is to teach and prepare you for these times so you can take advantage of those as well. Let me go ahead and pass this over to Kristen. Kristen, what should we be paying attention to that's happening at Gentian other than today with the Eat Outside Day? I know there's a ton going on.
Well, thank you for your wisdom, Chris. And thank you all for being here today. We have just a few reminders. As Chris has mentioned, today our offices are hosting our first annual Shred event. And we will have limited office hours between the hours of 11 and 2. It's also annual Eat Outside Day. So at our Shred event, we're going to have a taco truck and ice cream. And for all of you whom are at home today, I hope you get outside and enjoy this beautiful day and have a barbecue and be outside with your family and friends. For those of you with birthdays in July, next Wednesday, July 27th, we will be hosting our monthly birthday club. And each month we have everyone who's celebrating birthday that day come on in. We have lunch and coffee and cupcakes, and we hope you'll join us. Just please RSVP by July 21st. Also on July 27th, we will have our next Ladies and Gentian event. And as many of you may know, our event is a Zoom call where we get together with our clients, and we hope that you will join us. All of the women here at Gentian and our female clients come on in. This month's theme is about sharing information about you. Join us for show and tell, and we hope that you'll come in with some information. We'll go down memory lane with some of the experiences that you've had in your life and share them with ourselves and other clients, and just learn about what makes you you. And then finally, just the whole month of July, our theme is, each month we have a theme, and this month it's our country and our independence and our unique cultures. And we just hope you enjoy all that July has to offer and what Gentian can do and serve for you this month. Thanks.
Awesome. Thank you very much, Kristen. I appreciate that. There's a lot going on. Feel free to participate where you may and can. We appreciate that as well. And we love seeing your company at that as well. So one thing I wanted to do is just kind of close with this. You know, the fourth industrial revolution has been talked about quite a bit. And this is really one of computing and we call it artificial intelligence. It's well underway, still continuing. We're in the midst of it, probably in the early stages of it. But remember, those can occur with massive corrections in them as well. Just because we're in a fourth industrial revolution doesn't mean the market goes straight up. But what it does mean is that we're seeing technology increase at a pace, I think, as we said earlier this year, that's unfathomable. Remember, in the next 12 hours, you'll be exposed to more, if you want to, than your great grandparents were for their entire lives, as far as information coming at you. So it's why a lot of people feel that FOMO and fear, if you will. One thing I want to do is I still cling to hope. Hope is a very important piece here. We don't talk a lot about that. There's not a lot of discussions of hope in the news. It's not a very popular product, if you will, not a very popular sales product as well. So I look at it, the hope is something we need as humans. Hope that tomorrow's better than today. Hopefully we can do something good for someone else to raise their level of life. So these are the kind of things as I cling to hope. The hope is that we can continue to be better and better people. Always getting better is one of our monikers here, is AGB. So whatever we can potentially do to help you live a better life in that, with always getting better, with hope, with faith, patience, and discipline. A lot of the things that we say are really designed to give you tools that you can use to hopefully better yours or your children's or your parents or your spouses or your friends' lives. Anyway, we really appreciate that. We'll continue to offer those to you as well. We know that we've gotten together on the basis of retirement planning for many of us, but I know it's spread into much more friendship, and a lot of the benefits of it have been very close relationships, life, I think as Ken had said it before, offering each other perspective. We ask you questions, you give us perspective on many things as well, and that's very, very helpful. Well, with that, I'd like to close today saying, here at Gentian Retirement, we plan it, live it, and give it. We help you with all of those. It's something we've been specializing in retirement for over 25 years. It's the focus of what we do. We appreciate when you offer what we do to friends that you know, to friends that need our help, if you will. And what's interesting is we've had clients now, fortunately, so long, and you've had such great longevity that your children are coming to us to retire as they're beginning to retire now, which is always quite interesting. The first time that happened 5 or 10 years ago, I was astounded, going, wait, your children are going to retire? And sure enough, my client was 85 years old. And he said, yep, my children said, you've done well by me. So they're going nowhere other than to you. I thought that was really a great piece as well. So we're continuing to keep our team obviously tuned up, and people like Mike getting the CFP, congratulations, and continuing our advanced designations in education for you as well. So with that, I want to close today. Thank you for a wonderful, wonderful day here, and wonderful information from my team as well. Hopefully we will see you in 2 weeks again here. We will be having our bi-weekly webinar with whatever happens in between and keeping you updated today then. Thank you, and have a great next 2 weeks of summer.